We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person. But with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is The Financial Exchange with Chuck Zodda and Mike Armstrong.
Deeper and deeper we head into January, and we continue to get more economic data about the month of December as we head forward here, and the data continues to look pretty darn good. It's Chuck, Mike, and Tucker with you, and this morning, 8:30 a.m. Eastern Daylight Time, we received a couple different reports. The first, weekly jobless claims. Initial claims came in at 187,000. That is the lowest since mid-2022. So there is, again, if you were hoping for signs of recession or you thought maybe it'd be showing up in the labor market now, it's not. It's not. In fact, this is, kind of an acceleration here that you're seeing, if anything. Continuing claims dropping from 1.832 million down to 1.806. So we have fewer people collecting unemployment than a week ago. So again, I think that when you look at the overall context here, there are no signs of recession in the labor market right now. And if anything, maybe some early signs of a bottoming and some acceleration on that side.
So with that in mind, Chuck, I mean, it certainly has not led to a continuation of the extremely strong stock market performance that we saw, although stocks aren't doing poorly in 2024 to this point. So if we look at one of the other risks that maybe not average Americans or Main Street has for 2024, but rather look at one of the Wall Street risks, do we now start pivoting and do we start hearing all the conjecture about markets being wrong about interest rates for 2024?
Yeah, you're going to, because the concern that's out there is we've never in the U.S., in the history that we have, been able to conclusively defeat inflation without a recession. So if you don't get a recession, history points to, you don't really have much of a track record of being able to get inflation down and getting it to stay down without a recession.
You're right. No disagreement there. We should also point out that we're not exactly dealing with a sample size of like 100 different examples of high inflation in the modern history that the Fed has attempted to tackle and failed to do so. Right? Kind of example of like one.
It's a sample size of 3.
Yeah.
Like you got to basically be looking at the 70s, early 1950s, late 1940s, and 1920s. I mean, that's pretty much
all you got.
It. So, and the other thing is like none of those include situations where large portions of the economy globally just shut down for, portions of a year. So this is all kind of
new,
uncharted territory.
As it always is. I mean, it's never an exact repeat of history, but it's
some things are close though. I mean, like you see the housing bubble building, you're like, saw a version of this back in 1991. Like, it wasn't quite the same, but pretty darn close. Tech bubble, it's like, oh gee, we've seen this before, 1920s. Like, not great. So I think when you look at this, other data that we got this morning, building permits, housing permits, up 1.9% month over month. Housing starts down a little bit in December, but permits up is typically a good leading indicator because permits lead to starts. So the permits number, I think, is more informative about future potential economic activity. We also get the Philly Fed Manufacturing Index. Guys, I hate to break it to you, but these diffusion indexes are just absolutely hot garbage right now because they're not actually you look at the difference between what we're seeing in these opinion-based surveys and what we are seeing in actual economic activity in the manufacturing sector, and they just don't make sense.
Which is important for us to note. Right? You have to pay attention to it and acknowledge that it doesn't make any sense.
Yeah, this is something where it just doesn't, as an example, Tuesday this week, 2 days ago, we got the New York State Empire Manufacturing Index. It came in at a reading of minus 43.7. whereas the consensus estimate was -5. Now, I don't know what -43.7 means, but it's way worse than what was anticipated. And there's just some seasonality stuff that is just broken right now in December. It's just as an example, the last 3 readings that we have had for January for the New York State Manufacturing Index have been in the negative 40s.
It's not good.
Something about the seasonality, seasonal adjustments broke because of the pandemic, and they haven't fixed it. But before this, you literally had never seen a reading like this, and now the last 3 Januaries have just come through this way. So something is broken with the seasonal adjustments on that, just as an example. But the economic data that we're getting, I mean, again, weekly and continuing unemployment claims are as clear of a signal as you can get, because it's not a survey. It's not, hey, how are you doing? It's not, how do you feel about the job market? It's, yo, did you lose a job? Hey, are you still unemployed? That's what it's actually asking. Who's collecting unemployment? And the answer is not as many people now as 2 months ago.
Yeah, I've heard those Bureau of Labor Statistics surveyors use very casual slang such as "yo" and "what's up with your job status, man?"
If you're filling out an unemployment report, it's, hey,
it's a 1 or a 0.
You unemployed, man?
Yeah.
Like that's how the phrasing on it from what I've heard. So I think when you look at this, the fair questions that you are going to get are, does this mean that inflation is going to rebound? I think it's important to keep that as just a question for now.
Agreed.
And
I know you guys talked about retail sales yesterday, but I wasn't here, so as far as I know, it never happened. Again, another point that people are looking at and saying, "Ooh, that could be inflationary." But I think it's important to say, could be, right? Like, retail sales can go up without causing a bunch of inflation. See the entire 2010 decade.
And I think that ultimately, I don't like to preemptively punish anyone for something that hasn't happened yet. It certainly is something that you need to watch. And just as I'll say, I am equally critical right now of people who say inflation is gone and people who say inflation has to come back because of the resurgence in growth we're seeing. Inflation, is not gone yet. I'm not willing to say it's been vanquished. But I'm also not willing to say that this represents, the fact that we're going to have inflation rebound and see it much higher a year from now. I have no idea if we're going to. It's a possibility, and I keep that on my, I keep it out there as far as things that I consider and need to monitor. But I'm not going to preemptively say that we've failed if there are no signs that inflation is rebounding yet. Certainly, we're seeing some signs that maybe the decline over the last 12 to 18 months is starting to level out at a higher level of inflation than we'd like, maybe in the high 2s to low 3s as opposed to right around that 2% number. But who knows? It might level off and then go down from there. It might be, a little bit of a plateau before it dips further. It might be, something where it levels off and then reaccelerates. It might just level off and then stay level. Where, hey, the 1990s, you take a look at what we saw during that decade, which the 1990s, aside from the real beginning of it, 91 with the S&L crisis, aside from that, it's something where if you look at that decade, I think we'd all agree it was a pretty good decade. Is that fair?
I would agree.
It ended badly in It ended badly in 2001, but that wasn't the 90s.
Nope.
So when we look at the 1990s, and specifically what was the average CPI during that decade, CPI average during the 1990s was 3.02%. It was fine. I'm not saying the Fed should change its inflation target. But just because inflation is running at 3 rather than 2 doesn't inherently mean that you have a bad economy, because the 90s, which were probably the best overall decade that we've seen in the U.S. economy since the 1950s. Yeah, the 2010s, the back half was good. The first half was hot garbage.
Sure.
It's
really
just not a coherent decade. The 2000s, generally hot garbage. You had the tech bubble
defined by
bursting.
2 of the worst recessions that you've seen in
the 2000s,
decades.
hot garbage. The 80s,
Messy.
the 80s kind of like most of Gen X feels like it's just forgotten and lost. It's just kind of it was there. It was an improvement over the 70s, but just it didn't get there. The 70s obviously high inflation, not great. The 60s. Was the 60s conclusively worse than the 50s economically?
I don't know. I'm not enough of a economic historian to tell you. But can we? I want to take a step back because you might be scratching your head saying, "Well, okay, inflation is looking potentially worse or potentially better than some expected. Economic activity is picking back up. Why do I, Joe Normal, care?" And I think my conclusion on why you might care is because the performance of the stock market that we got in 2023 was primarily from November and December in terms of the biggest push towards high-digit returns. And the entire thesis there was predicated on the idea of growth and low inflation. And so, again, if either of those narratives get challenged in 2024, recession doesn't seem to be on the list of being challenged right now. But the inflation piece is getting challenged. You're seeing that in expectations about interest rates. And it's potentially making some investors a little nervous.
Mike, I have some data.
Hit me.
Okay.
Can we take a break and then go through your data? Because we're heading to break here. Is it quick data?
Fine. I guess we'll head to not anymore. Let's take a quick break, and when we come back, we'll debate whether the 1950s or 60s were the better economic decade.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Can you afford $15,000 a month for a nursing home? If not, you need to call Cushing & Dolan and get their new guide called Long-Term Care Planning for Procrastinators. Don't let a nursing home stay clean out your savings. Call 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
It's easy to imagine being a snowbird and moving to a warmer climate for a few months each year, but you need to have a sound financial plan in place if it's going to work. Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you're thinking of buying new property in Florida, you need to be sure you can afford another down payment. Perhaps you've thought about buying and then renting to a tenant, or maybe you just want to rent a place for yourself. Regardless of which way you decide to go, let the Armstrong Advisory Group help you build a solid financial strategy that may make your planning easier. Get your free copy of Armstrong's new guide called Can You Afford to Snowbird by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
All of us at the Financial Exchange are truly thankful for our partnership with the Disabled American Veterans Department of Massachusetts. You can help our great American heroes too by making a donation today. Your gifts can support the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation.
All right, so prior to the last break,
when I interrupted you,
I was... Listen, I do it to you all the time, so it's fine. Turnabout's fair play.
Mike does it more.
I asked the... Thank you, Tucker. Thank you. That makes me feel great. Is it okay for me to talk now? Oh, no, you are. So, I didn't live through the 50s and 60s. Wasn't here. So all I have to look at is the economic data and say, which would you rather live in? As you know, if you're looking at like the greatest economic decade of the 20th century, which one do you pick to live in? And so I had talked about how the 90s were like the greatest since the 50s, but maybe it's actually the greatest since the 60s. Here's what we have for all of the different decades. So first, let's start with the 1990s. The 1990s, and you have to also remember population trends and things like that, but
sure.
The 1990s, so average GDP growth of 3.66%. Actually, no, hang on. This is not right. It should be right, but it's not. Okay, yep, 1990s, 3.66%, and the inflation rate during the time was 3.02%. So that's kind of our baseline.
Mm-hmm.
1960s, average GDP growth was 4.33%. Average inflation was 2.33.
That's better.
1950s, average GDP growth rate was 4.13. Inflation was 2.04. So the question is, which one of those do you prefer? Do you prefer the one with like 4.3% GDP growth but 2.3 inflation, or 4.1% GDP growth and 2% inflation?
I think there's enough about the 50s in terms of post-war economy and just massive population trends that I have to go with 1950s over 60s, but it's a pretty close call.
So just to be clear, you're picking the 50s as the greatest economic decade of the 20th century for the U.S.
Yeah, I think I'd have to go with the 50s. I mean, maybe you could talk to the Roaring 20s, but that was
that ended
abruptly
very badly.
Interrupted. Yeah.
Yeah, that had one very bad year in it, which makes it automatically disqualified for purposes of this. The Roaring 20s hit a real wall in 1929.
Sure did. So, yeah, I think I'm going 50s. Very strong economic growth, massive population growth. Yeah, I think I would go there. 60s, again, if the argument for the 60s would be you've already accumulated the wealth, population growth did slow down a little bit, but tax rates came down under the Kennedy, that was also, again, very strong. But I think what impresses me is that the 50s was able to do it purely on post-war demographics almost.
Listener votes for the 1960s saying it was the original tech boom.
Yeah, I mean, look, the IBM, I got ahead of myself. The 60s were when you saw all the companies like IBM and Digital really making their push.
Yep.
And it was largely on the back of what was going on with the U.S. space program at the time.
Yep.
So I think if you also contextualize it with, hey, what are the broader trends we were seeing?
Massive technological improvements in the 60s.
I'm a space guy.
Sure.
Maybe I might have to go with the 60s.
Yeah.
From a music perspective, are you doing Elvis or are you doing the Beatles?
Easily 60s for music, yeah.
Really? I would take Elvis.
No, I'd go 60s.
You would take the Beatles over Elvis.
I think
Is that a question?
Just culturally, I think music overall.
I would take
60s.
Elvis over the Beatles. You don't get the Beatles without Elvis.
True, but I think I would overall take. I mean, if we're coming down to Elvis versus Beatles solely, but 60s was just more of a music generation.
Well, yeah, I mean, look, because if you have the Beatles, then you got to have the Stones, and if you don't have the
Come
Stones, I don't know if I would have been a great Woodstock guy.
Too dirty.
I just don't know about 3 days. I don't know about 3 days covered in mud.
Yeah, hear ya.
Don't know.
Hear ya.
Counterpoint is college was basically 4 years covered in mud, so who knows?
There you have it.
Let's talk a little bit about how Americans are feeling about the economy, because for some reason this is something that we have to. For some reason we get polls on this every week, and now we have the Axios Vibe survey conducted by the Harris poll.
I'm not going to do it because last time I did it, somebody picked up a clip of our show and made fun of me for making fun of the vibes. But come on, I hate this term.
Well, the vibes matter. Vibes is just a Gen Z version of sentiment.
Yes.
And sentiment matters, but the vibes matter. Language is always evolving. And so here's the thing, is this poll has consistently found that when people are asked about their own financial condition, Americans are optimistic. But that's pretty much any opinion polling on the economy. And we've talked about why this is that there are two reasons, I think, that Americans tend to rate their own situation consistently better than the economy. The first is just ego. I'm fine. No one likes to say they're doing badly.
Yeah, go ask how many people think they're better than average drivers. Same results.
You go and look at how Americans perceive their economic situation even in 08 and 09, and basically they all said the economy as a whole had gone to garbage, but they were fine. Well, that can't simultaneously be true. It's just not with the whole population. So I think that there's nothing here, in my opinion, other than people are always really hesitant to say they're doing badly. Let's take a quick break. When we come back, we're talking about $8.8 trillion in cash.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems, where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled, Can You Afford to Snowbird? Mike, people think about the big expenses when they're trying to figure out if they can rent or buy a place down south, but what about the smaller ones they need to account for as well that tend to add up?
Yeah, I mean, certainly when I'm thinking about buying a home down in Florida as the typical Northeastern experience, if you're talking about snowbirding, you're aware of the purchase price. You know you're going to have property taxes, but the other items do sneak up on you. We've been talking a lot about how insurance market in Florida has gotten a little bit crazy. Those costs get substantial very, very quickly. But other things as well, right? Just because you're not there doesn't necessarily mean you can cut out your entire internet connection or cable bill, or the fees for trash pickup might be built into the association that you belong to. And so really adding up all of these different factors is important if you're going to make a permanent shift like this of maintaining two properties.
And other things you have to factor in as well are travel to and from, and even travel while you're down there. Will you bring a car down there? Are you going to be buying a new one for that new location?
Right. Prepare to pay thousands of dollars each way if you plan on shipping your car back and forth, which honestly can be more affordable than owning two cars with the insurances and everything else that goes along with it, but you have to beware.
Our guide this month is titled, Can You Afford to Snowbird? And there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it online at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are mixed territory, but the tech sector is bouncing back after its recent skid as investors digest a fresh batch of economic data. Right now, the Dow is off by 60 points. S&P 500 is up over 1/3%. And the tech-heavy NASDAQ up nearly 1% or 137 points. Russell 2000 is up by 0.5%. 10-year Treasury yield pretty flat so far today at 4.10%. And crude oil up nearly 2/3%, trading just below $73 a barrel. In a Facebook post, former operating chief Sheryl Sandberg announced Wednesday she will be leaving Meta's board of directors. Sandberg has served as board member at the social media company since 2012. Despite that, Meta shares are up by 1.5%. Meanwhile, Humana shares down by 11% after the health insurance company cautioned this morning that a surge in demand for medical services and patient care would lead to higher than expected medical costs in the fourth quarter and could impact its 2024 forecast. Other health insurers are also seeing sympathy losses in reaction to the news. In an ongoing story, Apple will now remove the blood oxygen feature from its latest line of Apple Watches, which will allow the company to continue importing and selling devices in the U.S. as it continues to engage in an intellectual property dispute with medical device company Masimo. Separately, Bank of America upgraded the tech giant to buy, calling for a more than 20% upside over the next 12 months. Apple stock is up by 2.5% today. And Reuters is reporting that social media company Reddit has drawn up detailed plans to launch its IPO in March, citing people familiar with the matter. That IPO would mark the first social media IPO since Pinterest debuted back in 2019. I'm Tucker Silva, and that's Wall Street Watch.
Mike, who has $8.8 trillion these days?
All of us.
I have $8.8 trillion?
Yeah, you're part of it.
Oh, I love being part of something. Tell me more.
Well, what's happened over the last, really 2023 is primarily where this took place, is as interest rates jumped up, and we all remember the 2022 days of, what was it? What was the peak on I-bonds? Do you recall? It was like 8.6% or something along those lines.
I can't remember exactly. Yeah.
Me either. But a lot, as you can imagine, a lot of cash and other types of investments flowed out of your checking accounts, savings accounts, or even bond funds and stock mutual funds into cash-like assets. And so whether it be I-bonds, CDs, money market mutual funds, money markets from banks, there is an estimated $8.8 trillion parked in these types of assets as of the third quarter of 2023. And, as I think kind of happens every time we talk about potential for money to come into the market, there are some salivating and guessing as to when that will happen, and certainly you would expect to some degree that some of this cash to be invested in other ways should interest rates start coming down and those money markets go from, let's call it 5.25% where they are today down to 4 something in the future, if that in fact does come to pass.
So I think when we look at this idea of cash on the sidelines, I think it's kind of it's a dangerous one to play with in the context of markets and the overall economy, because both of those things evolve. They're not static. As an example, you go and you take a look at overall, cash levels in the 2000s. They went up significantly. Specifically, money market funds exploded positively in terms of assets in the 2000s. You went from about $1.5 trillion to somewhere in the ballpark of like $4 trillion by the end of the decade. Well, it wasn't something where that just made its way in and all of a sudden had this great thrust upward. It came back down in a span of like a year. But then the 2010s were still one of the best decades for investments after, even though money market assets had come down significantly already.
Right.
So I don't really know that you can tie this to anything other than the money market fund side of things. I think you can certainly tie to, like, there are so many things that go on here. It's, hey, is there money that's moving into these that otherwise was just elsewhere in the banking system? Maybe. Like in the last year in particular, the answer is yes, because we've seen what's been going on with other banking deposits. So I guess as I try to look at this, it's not something where I think you can conclusively say anything as far as what this means for the stock market. It's not like this is inherently going to go into stocks. It might rotate back into bank accounts or CDs if money market yields go down.
Yeah, I guess where I would land on it would be if you could give me convincing evidence that money market mutual funds within investment brokerage accounts had dramatically grown. That seems like kind of low-hanging fruit to rotate back into some sort of other type of investment other than money markets, but that's not what this argument's making. And by the way, like other measurements of total cash in the economy have been on a downward trend over the last 12 months. So I don't find – I'm with you. Like there's always a stockpile of cash sitting on the sideline. There's never a point in time where all of that is invested in the stock market, so don't go assuming that it will be in the future.
Yeah, I think that's probably a fair way to read the overall situation here on this. But look, it's who the heck knows what's going to happen with this. The United States striking Yemen again as the Houthis have continued to basically shoot whatever they can get from Iran at ships trying to transit the Red Sea. Yesterday, American military targeted 14 Houthi missiles just before midnight Yemeni time. These were not missiles that were in flight, but rather getting ready to be launched. And so you ended up with the U.S. striking these areas here. A couple things that I think are notable on this. Even with all of this stuff going on, including you had an escalation yesterday where Iran struck targets in Pakistan directly. So it's like, oh, gee, the Iranians are starting to get to the point where they are not using proxies and instead firing their stuff, direct from Iran into other, countries. That's a little bit concerning. And then you get all the weird stuff also where, okay, so Iran strikes Pakistan, and India, who, if you know anything about India and Pakistan, they
not best of friends.
They really don't like each other. India's like, hey, that's cool. Like, if you want to do that, we won't object. And you're sitting there and you're
Nobody asked you.
You're going, yeah, no one was talking to you about this to begin with. Just, stay in your lane. Like, you don't have to get involved just because Pakistan got hit by a bunch of stuff from Iran. But the piece that's interesting to me is even with all of this, oil still isn't barking at all. I mean, this started in earnest when? Late December, Mike?
Yeah. Well, sure.
That's when the shipping companies were like, hey, there's a problem here. Here's where oil is right now. It's at 73.09 on West Texas Intermediate. It's the same place it was at in early December. December 4th, it was in the exact same spot. So all this has gone on, and it hasn't caused the price of oil to move up. It's not affecting markets at all, which to me tells me there are a few possibilities on this. The first is, okay, maybe demand is actually so weak in China and other places that absent this, oil would be in the mid to low 60s. Possible, but I don't know. Possibility number two is, okay, this is just the state of play now, and markets are not concerned about any kind of escalation. That's fine. I could buy that. They don't think this is actually going to cause any issues there. The third possibility is that markets are dramatically underpricing the tail risk of a further flare-up in the Middle East, and specifically not any kinds of issues with the Red Sea, because the Red Sea, yes, there's oil that flows through it, but it's not the bulk of the traffic. It's mostly container ships that are going through the Red Sea. The bigger issue is the Persian Gulf and the Gulf of Oman. And if you start to see problems getting stuff through there, basically everything that's coming through the Gulf of Oman is oil. And this is where you get really nervous about Iran, who, if we want a quick geography lesson, sits right on they hold the whole northern coast of the Persian Gulf and Gulf of Oman. And specifically, they control the Strait of Hormuz, which is the narrow little waterway that connects those two areas. And the concern that you always have is Iran closing the Strait of Hormuz, because then all of the oil that's being transported through it kind of stops.
Yeah. I mean, you do just wonder, are you just desensitized to conflict in the Middle East at this point, to the point that nobody's willing to bid up oil because, frankly, over the last several decades, conflict in the Middle East has not resulted in at least hugely significant oil shocks. Right?
There's a fundamental difference, though,
in
is what we're seeing right now.
There is. But are we just so desensitized to it that it's just not going to move anything? Yeah, I don't know.
It maybe, but desensitization to anything in the Middle East is not really a good long-term strategy. It's something where you can have periods where what's going on doesn't matter. I mean, look, if we're being honest about what's gone on there, I mean, Yemen and Qatar have basically been, Yemen in particular has just been in a state of civil war for most of the last 10 years. Mm-hmm. Syria has been in a state of civil war for the last 10 years. Iraq has gone through multiple governments now in the last 10 years. Iran is just Iran. I mean, it's a very unstable region. And the problem with unstable regions is that eventually that instability goes beyond what markets and the world can tolerate. And that's the danger that's always present there. It's not good. Let's take a quick break here. When we come back, you want to talk about Davos?
Sure.
Not from Game of Thrones, but the town in Europe. We'll talk about that when we return.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
It's easy to imagine being a snowbird and moving to a warmer climate for a few months each year, but you need to have a sound financial plan in place if it's going to work. Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you're thinking of buying new property in Florida, you need to be sure you can afford another down payment. Perhaps you've thought about buying and then renting to a tenant, or maybe you just want to rent a place for yourself. Regardless of which way you decide to go, let the Armstrong Advisory Group help you build a solid financial strategy that may make your planning easier. Get your free copy of Armstrong's new guide called Can You Afford to Snowbird by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston. An extended nursing home stay could deplete your savings in months if you're not prepared. Cushing & Dolan, the experts in elder law, can help. According to Genworth, New England residents could see yearly costs of more than $200,000 in the next 10 years. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. Their new guide called Long-Term Care Planning for Procrastinators will help educate you on how to protect your assets so you can enjoy your retirement years. Learn about the steps you need to take to protect yourself and your family from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, so we got a whole bunch of billionaires hanging out in Davos right now. And Davos, if this is for the World Economic Forum, and if you're not familiar with Davos, it's a Swiss resort town that looks absolutely picturesque. I mean, the snow just is hanging on the trees in every shot. Do you ever wonder if CNBC blows fake snow just to make the trees in the immediate background of Steve Schwartzman look better?
I absolutely believe they must.
If
not the entire town of Davos does it.
Right, it feels like they must do that.
Yeah.
It's got that vibe to it with how just the trees are just beautiful every time I see it. And so you got a bunch of really wealthy people talking about, people that they basically never interact with and what's going to happen in the world in the upcoming year. And I don't know. I really dislike the whole bunch of rich people get together and we should listen to their ideas because they're not usually right even.
Yeah, look, I'm with you here. I think what seems silly to me is, the Journal is acting surprised that the topic du jour at Davos this year was all geopolitics. And my point would be, of course it's all geopolitics. Look what's going on in the world right now. In 2020, I don't even know if they held Davos in person, probably not, but it was all about pandemic and shutdowns and the right policy to deal with that. So this is the World Economic Forum is almost never about, hey, how do we implement the best trade policies and, what's the right way for taxes and GDP growth to occur. It's almost always about the issues of the day and how the world's wealthiest people think that we should deal with them. And so, yeah, I think the framework here is that even more than in years past when geopolitics, quite frankly, every single year, people are raising their hands and saying, I have a lot of concerns about geopolitical tensions. It's probably more front and center than it has been any time in the last decade plus this year.
With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or family vacation, the U.S. Virgin Islands is everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
U.S. Secretary of State, speaking of Davos, was Anthony Blinken was stuck in Davos for a few hours longer than anticipated because of a malfunction on his plane, a Boeing 737 that had an oxygen leak that was detected that they could not remedy.
How embarrassing. You're in there with all the billionaires who are on their nice jets that are new and clean and freshly painted, and yours is leaking oxygen? Ugh.
So the stories that I've seen have painted this as a bad thing for Boeing, but look, it may very well be. I don't know who does the maintenance on the presidential fleet of airplanes.
Probably not Boeing.
And like
one would hope the military.
Well, and you would imagine it's the military, but the other thing is things go wrong on airplanes all the time. Talk to anyone who's a pilot, and pretty much they get off the plane, like the flight, and it's, hey, here are the things that I saw during the flight. Can you have a maintenance tech check this out? And it's not always, really serious things, but it might be, the plane, the trim characteristics are a little bit different, or, hey, we had a warning light come on for this and that. It's really normal for stuff to happen on airplanes. So I don't want people to... I'm not sure if this is something that is abnormal in any way, shape, or form for what happens on planes otherwise, but it feels like it's being publicized just because Boeing has this admittedly very bad track record in the last 5 to 7 years, and it feels like this is trying to make its way into that story when I'm not sure it's related or has anything to do with it.
Yeah, I don't think you can. Look, Boeing just can't afford any more bad news that even mentions its name in the right. I'm looking for some way to tie the Spirit and JetBlue, merger cancellation to Boeing somehow, and so they can't really handle a whole lot more bad news, but I'm with you. I don't know that you can. I don't know that this is any sort of bad news for Boeing.
No, it's not like this is a new this is not a 737 MAX. This plane is 20 years old.
Right. That's why it had an oxygen leak.
So I don't think this. In the same piece, it also mentions that Germany, just as an example, they're retiring a bunch of their government-owned A340s that they use to transport around government officials. The A340 is an Airbus plane. Mm-hmm. Planes get old, and there's maintenance that's always required. And honestly, what I'm more surprised about is that Blinken didn't have a backup plane on site to begin with.
I don't think the taxpayers would love that. I would love that.
I don't know. You're pretty high up in the presidential succession.
You are, yeah.
You'd think maybe when you're flying internationally, you'd like to have a backup plane. I don't know. Quick break here. More coming up on the Financial Exchange in just a bit.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned, and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you retired like me, and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
An extended nursing home stay could deplete your savings in months if you're not prepared. Cushing & Dolan, the experts in elder law, can help. According to Genworth, New England residents could see yearly costs of more than $200,000 in the next 10 years. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. Their new guide called Long-Term Care Planning for Procrastinators will help educate you on how to protect your assets so you can enjoy your retirement years. Learn about the steps you need to take to protect yourself and your family from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off the 11 o'clock hour, the Financial Exchange is Chuck, Mike, and Tucker with you, and taking a look around markets. A little bit of a reversal from yesterday in a couple indices, at least. The Dow, unfortunately, still down 66 points today, but the S&P 500's up almost 15, the NASDAQ up 141, and so you've got 2 out of 3 major U.S. indices in positive territory. 10-year U.S. Treasury is up another 2 basis points to 4.13%. We got oil up 90 cents a barrel to 73.46 on the West Texas Intermediate gauge. Gas prices back up another half cent per gallon to 3.09 4/10. That has risen about 2 cents in the last month, so not a huge move up, but a little bit. We've just kind of been hanging out between 3.05 and 3.10 for the better part of the last month right now. Then when we take a look at gold, the yellow metal up $9.50 an ounce to 2016, and that's what we have going on in markets today at the moment. When we talk about the different generations that we have out there, one of the big things and one of the big themes that is being talked about an awful lot now is the fact that the baby boomers, like every generation that came before them, are going to die someday. It's just reality. And in financial terms, what this means, there are a ton of assets that are up for grabs because the baby boomers generation right now holds the lion's share of wealth in the United States. And so when we look at this, specifically the real estate market, baby boomers right now hold nearly $19 trillion worth of real estate, more than double the amount held by millennials and $5 trillion more than Gen X. So you've got $19 trillion in real estate that over the next 20 to 30 years is going to be going through a change in ownership. And so the question is, well, what happens to all of the real estate that is owned by millennials, and
millennials are boomers?
What's that?
I'm sorry, by boomers, and what happens to it? Yeah. So the oldest boomer is 78 years old. Youngest is currently 60. So I think you are thinking about the right time trajectory, Chuck, because
it's a 30-year path.
Yeah, because the previous estimates were come their 70s, baby boomers are going to start unloading some of this bigger real estate. That's for a number of different reasons. Pandemic being one of them, and then just demographic shifts in general, and just our change in preferences, I think, for senior living facilities has resulted in people saying, no, I'm staying in this house for longer than perhaps my parents did or the generation before me did.
So I think the case that this piece from Business Insider makes is that as you see baby boomers start to pass away, that Gen Z is going to be in the catbird seat to be able to pick these places up. And the case that's being made here, millennials, by the way, if you look at it, home ownership rates of millennials are now within 1 or 2 percentage points of where baby boomers were at the same point in their trajectory. So the case that's being made here is, look, by the time this happens, most millennials will already have places, at least the ones who want to will.
So got a late start but caught up.
So it's, hey, Gen Z might be able to pick up on, this excess supply of existing homes that ends up being liquidated. The counter to this is, what if they don't want them? Which in turn mean, what's that?
I'm interested in what you mean by that. Like, just because they won't necessarily be the ones that are inheriting them. If you take a look at just the age groups there, if you're a 60 to 78-year-old and you have children, your inheriting children are likely those millennials that we were talking about.
Yeah,
before.
Gen Z's parents are likely Gen X.
Yeah.
So the question that I'm asking is, the first thing that we've seen from a lot of generations is that you've seen them scatter in recent years. How many people do you talk to where you say, oh, gee, you're living in Boston now. Where are you from? Oh, I'm from Atlanta. Okay, your parents pass away in Atlanta. Are you going to go buy their house? Not buy their house. You're just going to be like, yep, I'm moving in there. Well, no. So you put that place up for sale. What if the places that are for sale aren't in places where Gen Z wants to move, is where I ultimately get to?
Yeah, I don't know. I guess, I would have some concerns about that in some places.
Like, as an example,
Maine would be one of them.
New England is the oldest part of the United States by median age.
Maine and Vermont in particular, I think, are 1 and 2.
So you got a bunch of old people who are going to be passing away in the next 20 to 30 years. Part of it also is in lots of parts of the country, you've got declining populations in rural areas. Okay, so there's a bunch of places that are now available where Gen Z doesn't want to move. And I'm not making the argument that Gen Z is like, hey, we only want to move to LA because it's so hip. Like, that's not what I'm saying. But there's a reason why, if you look at a lot of rural towns in the United States, the kids the last 30, 40 years have been moving away and not coming back. And so if the properties that you're seeing are in these areas, which a lot of them are because that's where the median age is highest, okay, so great. Now you got home prices in rural West Virginia that go from $100,000 a unit to $80,000 because even fewer people want them and there's more availability.
So let's focus on areas that we around here are familiar with. Let's talk about Maine and Vermont specifically. Do we think that part of the reason that there's been a shift away from some of these areas and towards the Sun Belt, for example, is at least in part because of overall cost of living and cheaper housing prices in general? Because if that's part of the argument, then more housing stock coming onto the market might in fact remedy the population shift from one area to another.
I don't think so. I mean, let me just look at an example of Bangor, Maine, just as a hypothetical example here. Bangor, Maine, its population in 1960 was about 38,000 people. Today it's 31, so it's declined by almost 20%.
Yep, that's significant.
If I were to go onto Zillow right now, which I am as we speak, and go and say, hey, let me look at places in Bangor, Maine that are for sale. I got 77 results in there. The most expensive one is, it looks like this is a 3-unit. The most expensive single-family one that I can find is $499,000, and the vast majority of listings are in the $200,000 to $300,000 range. So Bangor, Maine is not seeing people moving out because, like, you're talking about homes that are priced pretty much like at or below.
Median.
I mean, the 200 to 300,000 range is below the median in the U.S. So it's not that people are leaving Bangor, Maine because home prices are too high. Like, no, they're leaving Bangor, Maine probably because a lot of the jobs in Bangor, Maine left over the past 30, 40 years, and they're saying, I want better opportunities elsewhere. On the other hand, you take a look at, the Boston area inside the 128 loop, some of the highest housing costs in the world, not just in the United States, in the world. and we can't build enough housing because people are willing to pay those prices.
Yeah.
So this is kind of what I'm getting at is Bangor, Maine is my example here. It's a town of 30,000 people where half of them are over 45 right now, and I'm guessing I'm guessing Maine probably skews older the further you get away from like Portland and York and areas like that. You might have half that town over 50 or 55. If those people pass away, that availability, the availability of units there, what does it do for, like, does Gen Z benefit because a bunch of them want to move to Bangor because now it's, even cheaper to move there? Location matters for real estate, and I think that when we look at this, the youngest place, Utah is the youngest state in the country. I think the median age there, we said the other day, was like 31. Okay, obviously you got a lot of young people that want to move to Utah, but it also means you're not going to get a whole lot of inventory because you're not going to have a bunch of boomers passing away the next 30 years.
Right. So, yeah, it's a good question. What does it do to the real estate market in some of these rural areas that have already been in decline? Does it exacerbate a decline, weaken the tax base even further and push cities into the type of reform that Detroit, for example, has had to undergo over the last decade? Which, by the way, Detroit, I think inarguably having a comeback moment. I believe they had the fastest pace of real estate price growth in the entire country in 2023, but certainly had to undergo some steep structural changes to get there.
I also will say I can't wait till I get to the point in my life when I can have my death analyzed by who's going to benefit financially most from it.
Yeah.
This
article, like as seriously as we're talking about it, does just give off the tone of when are these baby boomers going to die so we can inherit their real estate?
Right? Like I'm sorry.
I didn't want to go there, but that was the way it was written.
It's just, I don't know. It's a little dehumanizing to be reduced to, well, who's going to get your house when you're gone?
Yeah.
It's, I don't know. It just doesn't sit great with me, but hey, it is what it is, I
Maybe
guess.
all the Gen Xers are going to move to Bangor, Maine when they retire.
Mike, if you had to pick somewhere not in a major city to retire to, maybe you would pick a not major city, where would it be?
Chuck, you're getting me right on the spot here.
You haven't thought about this?
Of a non-major city to retire to?
Yeah, if like you get to retirement and you're like, you know what? I just want to get out of this and I don't want to go back to something similar.
Maybe somewhere in the Southwest that maybe like a Tucson, Arizona or something along those lines that just has constant gorgeous views.
Tucson's pretty major, isn't it?
I guess. So give me, I don't know any of the other cities in that general area that wouldn't be considered major enough, but so somewhere in that type of ballpark.
Las Vegas.
Oh, very
nice
minor
little
city.
suburb in Nevada.
Yeah, it's I've heard of it. I've heard of it. I'm going. If you want me to get off the grid, I'm going Wyoming. Get me out there, a bunch of
okay.
Get me to like Casper, Wyoming, or something like that, and I feel real good about myself at that point.
Not Davos? No.
What's that?
Not Davos.
We were folks in the U.S., but that's a fair point. Maybe
I don't think the folks in Davos would appreciate the pranks that I would like to play on the billionaires.
Also, none of us can afford to live in Davos. So we're on the same page.
Hey, Jamie Dimon, your plane's crashed. Like
planes. Yes.
Right.
Your backup plane crashed.
Steve Schwartzman, your refrigerator on your plane is running. Like, you better go catch it. I just don't think that would play well there. Let's take a quick break. When we come back, we've got trivia, and then we're talking about why Google thinks they need more job cuts this year.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com.
Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled, Can You Afford to Snowbird? Mike, one of the biggest decisions to make on this front is, should someone look into buying a place somewhere south, or should they look into renting a place somewhere south?
I'll tell you, it's funny to me, but it's so ingrained in our culture that home ownership is the way to go. It's the way to build wealth. It's just what we've all been trained on. And there are a lot of those benefits, especially if you're a primary residence. But I frequently see mistakes on the choice of home ownership versus renting when talking about a secondary property. And so there's a number of key factors to ask yourself when you're thinking about going to that second property as to whether you should own or rent.
What kinds of things have to go into that decision?
Well, I mean, first and foremost, how confident are you that this is exactly where you want to be? Because when you factor in the transaction costs of real estate, they add up quickly. And so if you make the wrong decision and 3 years from now you're relocating, it's going to be very tough to recoup your costs on that front. But how long will you be spending during the winter months there? Are you going to be spending the winter months? You can get a great deal on renting if you're on off-season or shoulder seasons. And so that can make things much more appealing. And then just quite honestly, what sort of person are you? Are you going to want to deal with the maintenance on a property that you're only visiting 3 to 6 months a year?
Our guide this month is titled, Can You Afford to Snowbird? And there are two different ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can go to ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Was elevated to president when William Henry Harrison died after only 31 days in office. Tyler had a difficult time as president. At one point, he was even expelled from his own party while in office. Trivia question today: Which president succeeded John Tyler to become the 11th president of the United States? Once again, which president succeeded John Tyler to become the 11th President of the United States? Be the, I want to say 11th, but that's pretty high. We'll go 8th. We'll be the 8th person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card tomorrow, 617-362-1385, and the 8th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Tippy Canoe and Tyler, too, am I right?
Totally.
Do either of you have any idea what I'm talking about?
Yeah, campaign slogan for...
I have no idea what you're
Tyler
talking
was the
about.
running mate, but who is actually running?
William Henry Harrison.
William Henry Harrison, yeah. Okay.
The hero of the Battle of Tippy Canoe.
Yeah.
So there you go. That was the slogan. I believe it was made into a song, actually, back in 1840.
That was a good one.
I believe it was featured in the show Parks and Recreation, and it was laughably bad, in fact.
Yeah, the first verse, I just pulled it up here. What's the cause of this commotion, motion our country through? It's a ball rolling on for Tippy Canoe and Tyler, too. And with them will beat little Van. Van is a used-up man. And with them will beat little Van. I guess Martin Van Buren was not particularly tall. Is that what I'm gathering from that?
I guess so.
That's what it seems like. Let's talk about Google. So, Mike, I've got this developing thesis that Google is the most boring, stagnant, big tech company in the United States right now.
Yeah, you voiced that.
And this piece does nothing to discourage me from holding that view. Sundar Pichai put out a memo yesterday titled 2024 Priorities in the Year Ahead, and it's talking about how we have to cut a bunch of jobs in order to get better at AI. Which, listen, you can't spell Sundar Pichai without AI.
That much is true. Google's not alone in this very rapid pivot, but the seeming pandering to stock market investors right now who are infatuated with artificial intelligence by every major tech company seems just so poorly thought through to me. Like, the only one that it seems to me genuinely has a workable plan is Microsoft. Of the big tech companies for how they are going to try and utilize and leverage artificial intelligence, Microsoft is the only one out there that I can concisely look at and say, yeah, I could see how if you successfully integrate this into your product suite, you could make it more desirable for businesses to own your products. Everyone else, I'm like, Google, artificial intelligence, if you screw this up, could completely ruin your business.
I'm fine with Google focusing on AI. I mean, it seems like something that, is a fit for them in terms of what they want to do. I just think that what do they do that's interesting now? You use Google, Mike, right?
I do.
Doesn't it just suck now? It's all SEO optimized garbage that makes it so hard for you to find what you're actually looking for.
Yeah, but I think that's more a result of the internet as a whole. Like, you can say the exact same thing about Facebook, about Twitter, I think.
No, Facebook's not that way.
Facebook's absolutely that way. If I log into Facebook, Tucker, I know you don't use Facebook, Chuck, but Tucker, if you log into Facebook, when you scroll through your feed, all you get is clickbait garbage. And I think the same can be said for Twitter. I think the same can be said for
But that's because your friends are posting clickbait garbage.
Internet.
That means you need better friends, Mike.
No, it's just pure advertisement at this point, and I think that's what Google has become too, and that's what a lot of the major internet companies have become.
So there's got to be a better way, I guess. I just, at least with the other ones, they're trying to do new things, even if they're failing.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
trivia question today was which president succeeded John Tyler to become the 11th president of the United States? Well, that would be James K. Polk. John from Salem, New Hampshire, taking home a Financial Exchange Show t-shirt, and John's also registered to win a $100 gift card to Applebee's, which we'll give away tomorrow. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only.
Mike, what are we seeing in terms of data on Americans' work weeks?
This piece out from Bloomberg today from Connor Sadden, who's a columnist there, about the shorter work week and how, if you see it meaningfully shortening, can be a canary in the coal mine for the overall labor market. The idea here being that before employers lay people off, they try and rein in costs by shortening overtime hours and requiring manager approval for longer work weeks and things along those lines. And he lays out a couple of data points that might insinuate that we've come off the peak long work week. I'm not sure I draw the same conclusion that he does of a overall weakening labor market or potential for a weakening labor market. Was your read the same way that was the argument he was making?
Yeah, I mean, this is a data series that has been in place since 2006. So we only have about 16, 17 years of data on this. And basically for the entirety of it, aside from the 2009 recession and the pandemic, this data series was always showing that the average work week was between 34.3 and 34.6 hours. It started to meaningfully decline below that in November of 2008, but look, by November of 2008, we knew the U.S. economy was already bad. It wasn't something where we were like, oh, this is an early sign of recession.
Right.
It was, hey, markets blew up 2 months ago, and now, this is happening. Likewise, with the pandemic, you ended up with a real just shift in who was actually working and a lot of overtime being done by those who were still working. And so the average work week spiked there. So I'm not really sure that this is a valuable statistic with any meaningful signal to it as part of, trying to predict what's going on in the economy. I generally like a lot of the work that Connor Sen puts out, but this is one where I look at it and I'm sure that this is saying what he's implying it's saying here.
Yeah, I'm kind of with you there, and it goes back to a lesson I feel like we've attempted to dole out a few times on this program, which is articles like this can get you caught up in the moment because I think you can read this and say, oh boy, recession coming. Look at what Home Depot's doing, for example. Look what this, that, or the other company is doing. And if you combine it with what we just read about Google, how they're going to have layoffs, watch out. This is the beginning of layoffs heading into some sort of a tech bubble recession. And I think my point would be that this one data point or any one data point can't really drive you in that entire direction. And then finally, furthermore, if you're reading it in Bloomberg, others have also read it and you have no advantage on any of that. And so my main point here is that if you're using anything like this to try and come up with your overall investment philosophy about what's going on in the economy and what's going to then correspond to the stock market, which, by the way, don't frequently correspond very well. We've had terrible economies with raging good stock markets and the opposite of that as well. I would encourage you to take a step back and really think about things. And if you're maybe heading towards retirement or heading for a big moment change in life where you're trying to evaluate how you approach that next stage and how your investment portfolio is going to feed into all of that, folks at the Armstrong Advisor Group would love to chat with you and provide some of that hands-on guidance. Maybe you've got questions about how, which investment account you're going to have to use first for funding your retirement. Maybe it's funding college or that first home purchase or downsizing your home and looking at a new one and trying to figure out, okay, how is the investment portfolio going to work into all of that? Give the folks at Armstrong Advisor Group a call. Number here is 800-393-4001. Once again, that phone number to speak with a real live human being over here at the Armstrong Advisor Group about your financial strategy is 800-393-4001, or you can schedule an appointment online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Apple announcing late yesterday that they're going to begin selling versions of their latest Apple Watch devices without the blood oxygen feature that has been at the center of a legal battle between them and Massimo Corporation. The company said late yesterday, after their appeal was not struck down, but basically they were appealing an earlier ruling saying, hey, can we get a stay on this so that we can still sell these devices while, we're trying to figure this out. And the appeals court was basically like, no, you can't really do that. That wouldn't really make sense, because now you're potentially adding more devices that are violating the patent. Now, the interesting thing on this is that Apple is going to still sell the devices with the blood oxygen monitor.
Yeah, they're just going to turn it off.
They're just going to turn it off and basically have a link to, hey, here's why we had to turn this off. So clearly it's cheaper for them to not change any production on this, which makes sense, and just produce it but not enable the feature, which leads me to the question of, who's the first person out there that tries to jailbreak this feature so they can use it for their watch without, Apple's consent?
Good question. Probably won't take long, although I'm not sure how many hackers are that interested in their blood oxygen levels, but maybe they are, and I'm just missing the boat on this. I think the other interesting question is, let's assume that Apple loses the appeal and loses this lawsuit, at which point they've got a piece of hardware that they can't actually utilize on their smartwatches. Just how willing to pay Massimo are they going to be to activate this feature on their watch? Because you've already got a sunken cost in terms of all the hardware that's been put out there. But I'm getting ahead of myself there because we have no idea how the appeal is going to go.
The other thing on this that I have a question about is the further this has gone, and again, I'm just assuming that the initial ruling is correct and that Apple did violate the patent, because I have to base everything on what we know to this point. Why was this the hill they wanted to die on? Mike, you ever looked up how much pulse oximeters cost that measure blood oxygen levels?
I have not.
They're like $10 on Amazon.
Yeah.
It's not like this is a technology that doesn't exist otherwise, and it's not like they're particularly intrusive. It's a little device. It's like the size of, I don't know, like...
goes on your index finger, right?
Yeah, it's one of those things that they clip on while they're taking your blood pressure.
Yeah.
They cost $10. You can put it on your desk, so if you have, COPD or something where you're worried about how much oxygen you're getting in, you can literally just pick the thing up off your desk or your table or wherever it is you're sitting and measure it. It's not intrusive. It's not like there's a finger prick that needs to happen. Why was it so important for Apple to have this feature in their watch that they would violate a patent to do so?
I mean, who knows what was going on behind the closed doors, but I think a lot of companies have proven over the years that they get to a certain size, scale, and influence and say that we can do whatever the hell we want.
Maybe, but it's just like the holy grail for them is still, hey, we want to figure out a way to measure, blood sugar just through a watch and without a finger prick.
Sure.
I totally get that, because it's like, hey, now I don't have to go through this whole hassle and pricking myself in this. Totally get it. This is like, hey, there's a pulse oximeter sitting right there. Let me put it on.
Yeah. I hear you. I think probably when you're in these rooms, you're saying, what's the likelihood of us really having to spend that much money on lawyers and then losing this case compared to having one more feature in this watch that we can brag about? So, yeah, I think that, quite frankly, happens a lot in large corporations.
The other thing in terms of this that I just wonder about, as an Italian man, I'm blessed with rather hairy wrists. Would this even work on me?
I just
fingertips.
Don't know, Chuck.
My fingertips don't have any hair, so it's cool. But there's like an extra layer that I have that a lot of people don't, and so I'm wondering, is this a feature that even if enabled, would it work on folks like me?
You and the Geico caveman just struggling to get our blood oxygen levels taken.
It's this is one area where older might be better for me in terms of, the fingertip might work better than the wrist on me at least. Just putting that out there. Let's take a quick
fun facts that nobody needed to know today.
Listen, it's fine. This is I've been told that this is what the people want, and so I'm just providing a service. Let's take a quick break here, and when we come back, we'll provide another service, and that service is Stack Roulette.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, what do you got for me for Stack Roulette?
Spotify continue to dominate in the audio streaming market. They make up the biggest part of the market share at 30%. Others like Pandora, Amazon Music, Apple Music have a fraction of that type of dominance, and yet they cannot seem to figure out how to make any money here. Their endeavor into podcasting doesn't seem as though it's been a huge profit center. Everything else that they do has massive licensing fees, as you can imagine, playing Taylor Swift songs over and over. You end up having to pay Taylor Swift a whole bunch of money in order to do that. And I think I'm starting to question, really, clearly Netflix has figured out how to run I'm going to say like a similar type of subscription business, but they've done so on their ability to create meaningful, desirable content. Spotify, their success has come on, everybody wanting to just listen to music that they have to pay licensing fees for, and I'm not sure they've proven that they can get to the point where they can create enough intellectual property to make this a viable business model.
Yeah, it's something where they're doing $13.6 billion in revenue over the last 12 months. Net income is negative. EBITDA is negative. Operating margins are obviously negative as a result.
The one area that I think is interesting to me is like, hey, Spotify, could you in fact make a way? They've been trying to make way into concerts, selling tickets, and launching concerts, but you're up against a behemoth of a monopoly there, and I might not like Live Nation, but I don't know how you compete with them.
Well, it's basically impossible.
Yeah, they're a monopoly.
There's no competition on that side. It's very, very bad.
If I'm Spotify, I charge the same price as Netflix because honestly, I would pay for it. It's only $10 a month now.
The problem is Apple will do it for cheaper because they're willing to lose money on it. So is Amazon.
I'd still pay for it. It's a much better product than Apple Music.
Really?
It's not even close.
What makes it better?
Their algorithm, based on like what you're in the mood for, or how much they know your taste in music, is unmatched. Really. They've also debuted in the past year this AI DJ that will like give you recommendations and it'll act as if you're listening to the radio. It's kind of crazy.
I'll be honest. If prices got much more expensive, I would look for an alternative. Yeah, if this went up to $20 a month, I don't remember what I'm paying now. I think it's $14 for my wife and I for like a dual license per month, which is steep. And if it went higher than that for them to actually make money, I'd be willing to bet Amazon would be willing to lose money on me to do the same type of product. And I'd be also willing to bet that Amazon would learn enough about my music listening habits to get close to what Spotify already does.
Why does everyone like music but no one wants to pay for it?
I'll pay for it.
When we talk about...
Because of Napster, I guess?
But when we talk about this, people have like 3 or 4 streaming services that might cost like $40 to $50 total.
Yeah.
But we talk about Spotify going up from 10, and you're like, no, I won't do that.
Probably because of the tradition of radio, quite honestly. If I'm just thinking about how we've always consumed, maybe that's not a good example because before cable TV, you had antenna and people were willing to transition over, but... the existence of AM and FM radio effectively being free with advertisements for how long now, I think has just ingrained in people that music shouldn't cost money, I guess.
It's going to be really funny when the conclusion of this 30-year trip into different forms of streaming media ends up getting back to, hey, it's free, but here's some ads. Because that's what's happening.
It's cheap, but here's some ads.
Well,
that's what's happening on the streaming side already for TV.
That's why I pay for Spotify, though.
Oh, my God. I used my brother-in-law's Peacock to watch Brooklyn Nine-Nine the other day. Unwatchable. All the advertisements that I couldn't fast forward through. I turned it off after like half an episode of Brooklyn Nine-Nine, which is a sitcom. Unwatchable.
What was it, like 90-second spots?
Yeah.
Yeah.
There was like 4 of them. I haven't watched a sitcom where I had to actually watch advertisements in forever. I'm not doing this.
Yeah, I'm trying to think of the last show that I watched where I sat through ads. It might be Lost, like 15 years ago.
Yeah.
I guess probably Breaking Bad, actually. The tail end of that was only like 8 years ago.
Like, I'll do it for some reason when I'm watching live sports. It just doesn't bother me. But when I come to a sitcom, I just go insane.
I take it back. Even when I'm watching stuff now, Better Call Saul finished up last year, I just start the show 15 minutes late and skip the ads.
Right. Yeah.
Yeah, it's wild. Mike, you remember when we were talking about the fact that Snoop Dogg gave up smoke last year?
I do. One of the better advertising gimmicks that I have seen.
We thought it was one of the better advertising campaigns, but apparently it didn't actually translate into any meaningful jump in sales for Solo Brands, the company that makes the Solo stove.
Oh, no doubt. I think a commercial can be very good without actually resulting in any net sales, and I think that this was, but clearly did not pay off for anyone other than Snoop.
Well, because the problem here is that the CEO, John Maris, just lost his job probably because he spent too much money on Snoop.
Yep.
And so you got a new CEO, Christopher Metz, who is coming in, or rather just came in, effective January 15th here. So it sounds like they basically said, look, we added like 60,000 people following us on social media, but we're not sure if any of them actually bought new Solo stoves as a result.
I'd still hire this guy in a second. And that really was a very creative marketing idea. And I don't think it translated to revenue because I feel like everybody who wanted to get the Solo stove already had it.
Yeah, it's a good ad for a product that nobody wanted to buy anymore. I don't need another one.
The pandemic happened. Everybody was locked down, so they went out and bought Solo stoves.
You know what they need to do? They need to do the Saturn method of just buying Solo stoves that break frequently.
Saturn?
So Saturn cars.
Oh, did they
make a
break
really flimsy but high quality, but smokeless stove, so that every 2 years I have to go replace it with a new one. That's the method.
That sounds like a brand that no one would like, which is why Saturn went out of business. GM was like, "Oh, we got to get rid of this because it's not making money for us."
That car sucked.
Yeah, the Saturn brand. How long did that last? Like maybe 15, 20 years?
I don't know. My wife had one. It was brutal. Oh.
Was it?
Oh man, went 0 to 60 in like half an hour.
It's cool if you're not in a hurry. Let's take a break for the rest of the day. We'll see you tomorrow on the Financial Exchange.
With winter in full swing, it's time to start thinking about the sun and the